Hey everybody, Kimosabi here. I'm going to try to give you a quick little update of what I'm watching here. I have marked off this range here with a fair value gap. I think that was on a 2-day. Came and tagged the 50% of that perfectly. Grabbed liquidity, sharp rejection, and now it's trying to find support in this area right here. So it's possible that we're mimicking this leg with this leg, and we're going to chop around like this. If price holds above the 61,500 area all the way until Friday, we might start seeing a breakout Friday, Saturday, and Sunday to mimic this move. And then next week come down for a pullback to back test the long standing supply line for an extra push up, somewhere in the 74 to 75,000 range. But we can get a more precise measurement. So failure of that would be, stop loss below this low. In my opinion, if you break that low, even trade below it, there's no reason to trade below it unless if you're seeking out this liquidity over here, which would be a back test of the breakout. You'd be back testing here, coming back to previous demand line, and back testing a previous support supply line. So it is possible that we have some kind of news event that gives us our ABC. Something like this, A, then B, then C. This would be around halfway through the month, around the 15th, 14th, 15th. Still a possibility. If this like channels out or something like that and then breaks down, you might be able to get that. There definitely is a valid sell setup. I can easily identify liquidity down underneath these lows, and 50% of this daily wick would probably be the sell setup. Stop loss at the high. If this wick high is taken out, it would kind of add confluence or add confidence to the idea that we're going to chop around like this in this range before breaking out. If you have been following Camel Finance and his cycles, these cycles are playing out, and we're in the timing window for a cycle low somewhere in this area. So hitting it on halfway through the month, I think, would be a little late, but sometimes we get those longer cycles. Zooming into the 4-hour, you can see this pattern playing out pretty nicely. The chop there, chop there. So that's a very nice ABC pattern completed. And now you have this move that came out of it that doesn't match anything coming down. So this could start going up and adding confidence as soon as this high is broken. Don't necessarily expect it to break out. I'm kind of expecting the pattern to kind of repeat this along with this. Now we have a down move, so maybe chopping like this until Friday. Give us some news events. We have FOMC, I think, tomorrow. Inflation data will be coming out this week as well, so that might give us the catalyst for some chop up and down before resuming this pattern. Like I said, if the bearish pattern plays out, I'm still looking at 56,412. But if the bullish pattern plays out and this whole leg repeats up here, we'll just take a measurement on closes on a 4-hour, project from that low, get you a target of 74,800, so maybe just shy of 75,000. This is in log scale, by the way, so maybe it gets up to there and then repeats this larger leg down from up there, which will get you back down to back test 65 before resuming this leg to complete the overall move. That would get you up to maybe 80,000 if it decides to do that. So that would take out all of the liquidity from the upper areas, cleaning out anybody who was having their stop loss above all-time highs or any of the lower highs that came in over the past 6 months, that would clean out all that liquidity. So from there, then we have to see what's going to be happening after that liquidity is taken, because it really makes a difference how that plays out. So we'll take it back to the daily and show how a distribution would potentially play out here. If it is in fact a distribution, you may get what I've called an upthrust after distribution, which may be just this mixed with this, then down, down, and then one more resumption higher up to there, just to clean out anybody who was short here. Get all the liquidations for whoever didn't put a stop loss and just decided to liquidate themselves, or even all the stop losses, if there is stop losses. But there's money to be made up here at these highs. So assuming that there are stop losses, those stop losses, as soon as they're triggered, turn into immediate buy orders at market, and that would fuel the price to go up higher. So if you're short, then you have your stop loss at the high that will trigger as soon as that breaks above, grabbing that liquidity, instantly pushing price up higher, and then price may come back down and back test and then push up, grab those stop losses and any remaining stop losses. So this comes in handy if this is in fact a distribution range that's been going on, just nothing but distribution. This helps further distribution for anybody that was long from lower, or just bought Bitcoin lower and wants to offload it. These stop losses offer the opportunity to offload a lot of Bitcoin. You'll have a lot of buyers that'll be buying the breakout. So if you need to find buyers for 100 Bitcoin or even 1,000 Bitcoin, you'll find them, the buyers, up here, whether that's the stop losses or breakout buyers. You have willing buyers above the high. From a trading perspective, anytime you break a level like that, it's definitely a take profit. You take some profit, raise your stop losses from here to here to here, and you might come back down and tag them and then keep pushing. So in the larger scheme of things, if you maintain a weekly uptrend and you take that liquidity and then flush it back down by back testing, any break above there suggests continuation. Because once you grab that liquidity, break back down, there's no reason to break above that high unless if you're searching for much higher prices or entering another markup phase after this ends up being reaccumulation. Though I do think the trappiest possible price action would be for this to look like a three-wave move, sharp rejection, breakout, consolidate, break up, break back down, then break up again, breaking that high, suggesting continuation to just fizzle out in 2025. I think that would be the trappiest possible wave pattern that I could think of. But as long as you're in an uptrend and you keep making higher highs and higher lows on multiple time frames, then you just stay long, you just keep buying. Same thing with if you're in a downtrend, there's no reason to expect anything different until it changes behavior. So we do have a weekly higher high close, sharp rejection, grab liquidity. Maybe it breaks out and keeps making higher highs, higher lows, higher high, higher low, and just starts a markup phase from here. But I would definitely be on guard for a liquidity grab, quick rejection back inside the consolidation, like closing below this trend line. That might look technically pretty bad. Back test and probably get some supply to push you down pretty far if that does indeed happen, and that would confirm this as a distribution pattern for me. So the other way I really differentiate it is based on trend, higher highs, higher lows. or lower lows and lower highs. And now with Camel's cycle timing kind of helps as well. So yeah, so if you break up back inside the consolidation, that's no good. If you break up, backtest and hold here for a bit, and then break up, that's pretty bullish. But it may also be the ultimate bull trap. So pay attention to trend, don't get trapped, know your invalidations, and yeah, have a good night, keep your stops tight.